Good afternoon to all, but good morning to the best coast. Thanks for joining us here at Cannasure Insurance Services. I wanted to share that we were just selected as the MGA of the Year from Insurer Magazine. So we're very proud today, as you can imagine, having that kind of recognition. And it's really a wonderful lead-in or a compliment to what we're going to really spend a lot of time on today, which is our MGA program. We have this as our annual attempt to communicate what changes are happening within Cannasure's MGA program. And that'll be led by Kieran O'Rourke. Kieran will be followed by Jenna Keesey. Jenna is going to be sharing our new preferred or select market program, new to us since, let's just say March, April. And she's got some exciting updates on what she's seen so far and the coverages that are happening within her world. And that's a perfect lead into how I can conclude our seminar today, which is the additional coverages that happen at Cannasure's brokerage unit. And our goal, and it's really a perfect trickle down of how we look at business. So we have the opportunity to look at our accounts in the MGA program, and when things don't fit there, we bring in select markets, things that we have underwriting authority for at times, and sometimes where we don't, and act as a broker. So we're looking forward to sharing all that knowledge today. Quick comment in housekeeping that we have a Q&A button, as those who are familiar with Zoom. Our Q&A button is to try to grab as many questions as possible today. And what we want to do is those that we potentially miss, if we run out of time, we can have those questions saved and then answer after the fact. So the chat room is great. I'll be looking at it throughout the presentation, but please try to put questions in the Q&A section, which is on the bottom of the screen. With that, we will be sharing our slides with all those who have registered, and we have your email addresses captured. I would like to say, welcome Kieran O'Rourke to your annual MGA update.
Thank you, Jim. Thank you, Jim. It's a pleasure to be here with everybody today. Thank you for taking time out of your busy Wednesday to join us for this. This big update is kind of an annual event, although things are happening throughout the year. This is an interesting time of our policy program year because the reinsurance support renews on May 1st every year. And so from February until late April, we are doing a lot of work behind the scenes here to make sure that that whole process goes as well as it can possibly go. And we want to put all the facts out there so that we can get the best possible support on the table for the policyholders and for those of you that sell for us. And thank you for doing that. So the first thing I want to do on the first slide here is tell you that our $40 million capacity has been increased to 45. Probably a little dangerous to put this out there, but we are working for an additional 5 at this late date, which would bring us to a nice round 50. But for right now, right now, we have $45 million available TIV limit capacity at any one location, and that's everything all rolled up. So that includes building, BPP, all the traditional ISO type coverages, and then what we call simply industry property. And in our terms, that is living plant material on one side, and on the other side, completed stock, which is tagged and ready for sale. Everything in between is a goods in process. So we have a continuum of coverage among the industry property items. But you roll all that up, and if it's $45 million or less, then we are good to go. We're very fortunate, very honored to have yet another year of increased property capacity. This program, as many of you know, started in January of 2018 with no policies in force. And today we are in year 5 of our efforts here, and very pleased to have this kind of support in a very limited marketplace when it comes to reinsurers and carriers, for that matter, that are willing to jump in and enjoy the fruits of all these labors. As many of you know, we will offer a primary limit. Many of these installations are far greater than 45 or 50 million. And we will be there to offer a primary layer, formerly 35 million. Now that's been increased to 40 million. So 45 million, any one location, and on a primary deal, 40 million is the max on that. We are also entertaining excess layers as well. So again, just like before, we want to be very careful with those just because of the newness of that to insert our capacity above somebody else's primary, but we want to be part of those conversations to see if it will make sense for us. At this time, we did not get any changes to the casualty limit structure. As a refresher, we offer a 1 million, 2 million GL premises primary quote, and we can do a full 5 million above that for a total of 6. So 6 million premises GL, and that's paired up with a $5 million products liability limit, and that's all primary. So no excess involved in getting to 5 million. So 6 on the GL premises and 5 on the products as before. So let's go to the next slide. We've got some things that we are trying to rush to the marketplace now. The first thing is probably the most exciting. We are going to be offering, once everything has been finalized and stamped approved, an actual loss sustained business income option. We are going to restrict it for the time being to just established dispensaries, and that means 3 years of continuous operation. There should be a boatload of those that would qualify. We need 3 years of continuous operation because our rating basis is, their annual sales. We want to be able to see that, and we want to see it established in a 3 year glance. So actual loss sustained is going to be paired up with our tried and true, our traditional monthly limitation business income option. This will be, again, just for locations. It's a location level coverage. So just for locations that are established dispensaries. Off-premises power utility services is what ISO calls it, but off-premises power is what we all call it. And that is something that we are working on a sub-limited basis. Very excited to be able to trot that one out too. That is something that has been often asked about, and we're very happy to be able to put some forms together and some rates to address this need. Just as a quick refresher, this is when the power pole a couple blocks away, or maybe even a couple miles away, gets knocked over in an auto accident or some kind of a storm event. And that event affects the business that is a mile or a couple blocks or whatever away. We want to provide some sublimited service or sublimited coverage for those scenarios. Builder's risk options are something that's been sorely missing from our program, and we're happy to be including that in the near future. We are going to focus on the renovation builder's risk, where you've got an existing, in our terminology insured, an existing client, an existing policyholder that is going to be doing some renovations, and we want to be able to take care of that within the program. So we are going to be announcing that soon as well. The last thing is that we want to move the completed stock portion of our industry property, that being any property that is tagged and ready for sale. We want to move that from the name peril, including theft coverage that it has now, to an all risk cause of loss for that particular segment of our industry property. Now, in doing so, I want to be fair, that does add a coinsurance requirement when we do make that move. So unlike our current structure where industry property is written without a coinsurance penalty attached, this particular part of the coverage will have a coinsurance requirement attached to it. Our experience, which is, of course, as you know, over a decade now in continuous cannabis only operation, we think that values are going to be easily attainable, and insurance to value is going to be easy to maintain. And this type of property does really deserve an all risk, real insurance kind of coverage when it comes to causes of loss. Next slide. A couple more things on the casualty side. We are going to continue to increase our rating granularity when it comes to casualty. As many of you know that our Cannasure program users, we rate on sales. And these days, it may be more fair to rate on area where sales is not exactly applicable. And then the split between med sales and rec sales also. I think that by now, everybody is well aware of the fact that those two carry perhaps a different rating stance when it comes to possible product losses. So we want to do this to more accurately address the premium need for any given exposure, and we also want to stay competitive as well. Nose coverage. This is basically prior acts. We offer an occurrence form on the general liability. And when we are moving an account into the Cannasure program that was formerly on a claims made general liability form, we want to be able to make that move as easy as possible. One option is for the insured to buy tail coverage from the soon to be former carrier. The problem there is that some carriers will demand that you buy tail coverage on everything, including the products. Well, as you know, we all offer claims made on products. That's not necessarily the case if I'm willing to put the retro date where it should be. That leaves the general liability premises tailless. And so what we want to do is we want to offer that same type of coverage, but coming from us, the new carrier. So that hopefully will make the move easier to come off of claims made GL and onto our forms. It's optional. Some insureds choose not to, and they'll just go on their merry way, and we'll write the coverage without it. And then we also want to streamline the additional insured handling. Additional insured requests and pricing and what have you has caused, if nothing else, a little bit of friction on the service side. And so as underwriters, we need to be very global in our view of the product and how it is sold and handled and serviced. And so this is something that we want to do for two reasons. Number one, for the insured's sake, the policyholder, the only person in this whole deal that is writing checks. And also we want to make sure that our service is not encumbered by too much friction for things that shouldn't be. So very happy to be rolling all of those things out. Let's move to the next topic, which is our lighting supplemental. Now, you might be asking, on a program update, why are we talking about more supplemental apps? Well, we have wanted to be a market for everybody, and we intend to be a market for everybody. And if you don't quite have LED lighting in your grow facility, we still want to be a market. We are not in this to start shedding business in any way, shape, or form. So we felt that it was a good time to roll out our own lighting supplemental. It's very easy. It's one side of one page. It's already out there, as a matter of fact. So some of you have probably seen it. But what we want to do is we want to make sure that for that all LED facility, that they are getting the right rate. And for the non-LED facilities, the same thing, but perhaps a little bit higher rate. I guess what we don't want to do is we don't want to have the all LED facility subsidizing the non-LED facility. We want, as any underwriter, we want proper premium for the exposure. And this is the only way we can truly get to that. But we also want to focus on the insured's practices when it comes to ballast and bulb use. Not all high intensity lights are created equal. There's a very big difference, a very fundamental difference between high pressure sodium and metal halide. We also want to talk about how much are these things being inspected and maintained, not just the bulbs, but also the support structures. When we talk about underwriting implications, it's mainly pricing. Again, we want to maintain that market for everybody of, pretty much a price for all of these risks. We just want to make sure that they're priced responsibly. And the one thing about this lighting supplemental, if it is all LED, pencils down, you have passed the test, and just hand in your paper. So We think that we have probably one of the more user-friendly sup apps when it comes to lighting. Let's talk about the next thing, which is our litany of questions when it comes to equipment breakdown coverage. Dana, if you could just click the slide there. This is really just a reminder because we've been doing this for a year, but this is also in terms of wanting to be a market for as many risks as we possibly can. We are very proud to be able to offer equipment breakdown coverage, and we have since almost the beginning. This is just a reminder that when we do have significant limits, we will be asking if there's a boiler present and are there electrical backups. Very easy. Is there or isn't there a boiler? And if there is a backup system, what's the kilowatt rating and what fuel is it used? Very easy questions. And then we will be asking pertinent questions on extraction, machine detail, cost new, output, etc. Let's go to the next slide. Real quick, back on business income, probably the most misunderstood coverage in the insurance industry. I just wanted to reiterate this. I went over it last year on this webinar. I want to just hit it real quickly again before we can get to Jenna and just talk about how it is we do things. What I wanted to do when I put this whole thing together was to not use co-insurance wherever possible. And this is why we chose monthly limitation. The main thing I want to get across again is this is not 3 months, 4 months, and 6 months worth of coverage. We offer, this is an ISO form, same as it ever was. We offer coverage for the period of restoration, period. So the period of restoration, period. And all the fraction says is that's how much of the limit you have access to in any given month. That's it. Does not limit it to 3 months, 4 months, or 6 months. The coverage is for the period of restoration. That's why the limit is going to be the most important thing that you can do. And so the down and dirty worksheet is A, how long do you think the insured's going to be down? And B, how much income will be needed to be replaced by an insurance mechanism during that time? And C, during that time, how much in any given month would they need access to of that limit that we decided on in B? That's it. There's your business income worksheet, Cannasure style. Pretty simple. But if you have any questions whatsoever, please give me a call here at Cannasure. I'll be happy to talk about business income. Make sure you're squared away. And lastly, remember, this includes extra expense as well. So we need to build in limit for extra expense if necessary and if desired by the buyer. Let's go to the last slide. Before I hand it over to Jenna, just another reminder, a repeat slide from last year. We have plenty of optional coverages in property, GL, and product liability as well. And please remember these sublimits. Product withdrawal expense, we've seen this. We've seen product withdrawal. This is expense coverage only. There's no liability in this $250,000 limit. This is money to go get your stuff back. The professional liability for the bud tender behind the counter. Is that professional advice? If the listener heard, yeah, that's professional advice, then it's professional advice. Expanded property, sewage discharge, all very important. So remember, ask for the optional coverages on your next quote. With that, I think I've exhausted my time, and I'm very happy to hand it over to Jenna Keesey, who's going to talk about our preferred risk program.
Hey everyone, I'm Jenna Keesey. You may know me from the TOPA program. I am now running our preferred risk program update. Kind of thinking of that in mind, I think that our new little Cannabis program is definitely new to us as a direct right. And we're using this opportunity to help stand up our MGA program, as well as be able to provide some different options that aren't available there. Our idea is not to compete against each other, but to really be able to provide you with the correct quote option based on what you have. We like to think of our preferred risk as a little bit more of a small business program. But as you know, the TOPA program is not available in all states. So we have some additional capabilities where we don't have some opportunities there as well. Let's go to the next slide. So as we look at what we have, I'm going to go a little bit top to bottom. I'll start with my little package discussion. So a lot of you are familiar with Cannabis. We have the GL, the property, limited products liability for dispensaries and cultivators. We can work together with the TOPA program to provide higher limits on the products liability, where you may traditionally see 100, 300K as the highest limits there. For the property capacity, I can write up to a $5 million capacity. There's talk of going a little bit higher, but we'll get there when we do. Right now, we're really targeting about 2.5 mil TIV, and some of that has to do with our ability to go higher with a more significant building or TIV limit. I can do a lot of square footage rating, which is pretty cool, especially when you're dealing with some of these guys who have nice sales on the cultivation classes and so forth. We can really be very strongly competitive compared to some aggressive sales if you have a small facility that's just really pumping it out. Where we really find that we're going to have our best opportunities on this new preferred program that don't just coincide is our inland marine and our builder's risk products. The idea with builder's risk is we can kind of bring them in when they're in the builder's risk phase. We can bring them onto the full package with Cannabis, and as they grow, as they become bigger, we can start talking about putting them into a TOPA program quote as well. The builder's risk, I can do renovations as well as ground up construction. My TIV capacity is 2.5 mil. I can also do the existing building on an ACV for our renovation coverage, and soft costs up to 25,000. I have a 3, 6, and 12-month term available. Our MEPs kind of run along with that. So a 3-month term is going to be 100% MEP, 6-month is a 50%, and 12 is 100, or no, other way around, 25. And that'll just kind of work together. If you need an extension, that can typically work with our MEP as well. And it's been a great opportunity for us. It's one of those that we can turn around quickly if needed, and we can get the ball rolling for these construction activities. The inland marine side is really pretty fancy. We have 4 different types of coverage available. We have the contractor's equipment, scheduled equipment, Bailey's, and property in transit. So our property in transit, if you're writing a package policy, we can write very similar to the TOPA property in transit coverage up to a certain limit. Once we get to about $100,000, we'll start moving it into an inland marine category. Because we have Bailey's available, we can write these together where you can have some care, custody, control in the process of transport. This allows us to consider some delivery and distribution operations, which is pretty awesome. I know anyone used to our TOPA program knows that we've kind of had our hands tied a little bit on that class before. So it's exciting that from a direct perspective, we can pick up some of these class codes. And from the grand scheme, our class code list for this program is very broad. So things that don't always fit into the TOPA program may have a much better home in our new Cannabis preferred risk program. Going back to inland marine, I can even do cash in transit up to $250,000. Anytime that we're going to come across something where you don't really know if our limit is going to be good or not, just reach out, let us know. We've been very successful in our inland marine limits. Typically, they would like to keep it on the 50K per item range, but I have been successful in getting quotes for specific items that are over $200,000 a piece. So we're definitely paving some road with the inland marine program. They've had great loss experience, great performance, and they're looking to really open up that class of business as we are. It's definitely an underserved class of, or underserved coverage part in our market. Let's see, and the inland marine can be written as a standalone policy 400 MP, which is, I think, one of the greatest things about it. That allows us to be able to write a TOPA policy and then put an inland marine policy right next to it. Right, and I see we have some Q&A. Is any of this from me? All right. I see Jeffrey, will builder risk under preferred require contractor to complete work as current program, or will insured completing renovations be allowed? So this one, we are actually looking for the insured as the named insured on our builder's risk. So that's kind of works out that way. It's kind of nice. I'm looking for the GL and the property for those. So I know we've had a couple where maybe the contractor picks up the GL. We do have other options that Jim's going to mention on his brokerage side as it pertains to our brokerage builder's risk options, but our preferred would be the preferred if it fits in our 2.5 mil and being the insured completed renovations.
I think that's good for Jenna's Q&A until the end. Do you want to hand it off, or you want to keep on going, Ms. Keesey?
Well, I'm pretty good. I think I covered everything I needed to cover. I'm just happy for Q&As at that point.
Okay, then I'll jump in and wanted to talk about our brokerage unit. And of course, the goal, as mentioned, is to bring our MGA programs forward first and then backfill with our brokerage unit on ancillary coverages that either aren't in the MGA program or aren't as robust in the MGA programs. And so as we kick this off, Dana, thank you. To the next slide, we're happy to announce we have a brand new auto market that came into the fold within the last week. We just had a big kickoff meeting with the underwriter, and our goal is to utilize this new market as often as possible compared to our old auto market. And you'll see that in my presentation for the next couple of minutes, I'm going to not name names in terms of carriers. So some of that's to protect the innocent. Some of that was some commitments I've made that we weren't going to drop people's names, but you guys are always welcome to text me, email me. I think my contact information is going to be at the end of the presentation anyways. If not, I'll be the one sending out the information from this presentation. So you'll see my information as it goes. But the goal is to share information and drop knowledge. In this new auto market, we know that they're in all states except their California filing hasn't been concluded. It's done, but not loaded in their system or something like that. We know that they want to look at accounts with 3 or more autos, and that effectively is a $10,000 minimum premium. If you've all seen Cannabis Auto, it's not hard to get to $10,000 of premium. And I would say over 75% of the business we've written over the last couple of years has been over $10,000. So we believe this is very complementary. And we know that it's an admitted form. We know that we can do hired non-owned on a mile-on basis. As the underwriters telling us, they want to be employee focused for hired non-owned coverage. And it's a regular submission that you would normally give to any auto market. And our market has a much more shortened supplemental app than what you've seen from us in the past. So excited to bring that market forward, and we will have a lot of fun with it. We've also added a brand new D&O market, and that came with some EPL coverage as well. And we know that that has been a sore spot in the industry for quite some time. This market is pretty new to the cannabis space, but they're D&O specialists. They wrote the form themselves. It's really like a Kieran O'Rourke bringing his knowledge, but into the D&O space. They wrote the form. They understood what they were trying to serve in the marketplace, and they're filling a need. And that need is good coverage at good pricing. So we're excited to bring that forward as well, because they have a number of coverage enhancements that we can speak to when we share some of our marketing materials post this presentation. But at the end of the day, you're going to look at private companies with a $25K minimum premium. And who isn't breaking $25,000 in premium for D&O coverage, right? As Jenna teed up for me, when her program can't handle the limits required for builder's risk, we have a market solution as well. So Jenna gets first crack, and then every time that she says, I'm tapped out capacity-wise, we'll wonderfully take your submission to the brokerage unit. And we have a great market that's written a good number of accounts with us already today. I would say the average TIV we've seen has been about $6 million. And that's helpful because their frame appetite is 7.5. So we've been underneath the appetite range, but then if you have such like joisted masonry or better cover construction, those limits do go up as the construction quality goes up. And in that builder's risk market, there's plenty of enhancements, coverage enhancements available. Too many to list here, but we have a sales sheet or a catch sheet or a flyer or a brochure, whichever is your vernacular, that we have both on our website and then things that I can share with you if you want me to email. Dana, next slide, please. In workers' compensation, we've had a lot of fun on a national scale with a market that's been wonderful in the cannabis space. And we continue to support them, as the last bullet point says in our workers' comp thing. In fact, I believe we highlighted them in our newsletter that just came out 2 weeks ago. So you can read up on them a little bit there. But we have exciting news that we have a brand new California market for workers' comp that we haven't had in the past. Contracts have just been signed. the ink is dry and we're ready to accept submissions for them. That market is California only, with maybe some ancillary coverage, like a salesperson or two in a touching state, let's just say. But it's going to be 99% California. And our prior national workers' comp market hasn't really liked California that much in terms of wanting to be as aggressive as some of the other competitors. This market gives us that capability. So excited to talk about workers' compensation in California only or in multiple states. Another brand new opportunity that we've added in the brokerage space, special events. Through our insurance friends at Sutton National, we have a new product that is on Sutton paper, but it is not written by them. It is written by friends of ours in the industry. So we go to a facility that very few people have access to or know. So it is coming from another MGA partner of ours, if you will. And the thing that has been the draw are consumption special events. And I'm talking cannabis consumption. We know that the world has not supported that in the marketplace till today. And our market has been really wide open on that. They don't mind if there's musical acts. They don't mind if liquor is being served. They expect that security services will have an additional insured in favor of our special event coordinator. But it's been a robust marketplace. I think the minimum premium is $1,000. It might be even lower, but we've written some accounts in the 5 digits, let's say. So that's a new conversation that we're happy to share today. And here's a refresh or a re-support of the fact that we have a great crime market that specializes in cannabis. And again, it goes to the conversation of when the MGA program really can't have the coverages as robust as you might need for your clients, that's where an ancillary market or crime, as an example, complements your coverage offering to your customers. So the crime component is something that we see too much of that isn't insured. And we hope, kind of just like cyber, crime becomes more of a product selected because that coverage is needed in our niche marketplace. So hopefully we'll see from you more crime submissions because the coverage is there, the customers need it. Next slide, and last slide for me. We've promoted this in the past, wanted to refresh this as well. One of our partners is actively working with stock throughput, which is effectively a cargo form that they've added to, which gives us a lot more coverage opportunity for industry property, especially when that property can be mobile. Think of distributors, think of places that are vertically integrated, that are moving product from location to location, from grow to manufacturing on down to the retail distribution and sales sites. So the need for a program that provides that flexibility of location is what stock throughput is really all about. And that has allowed us not only to expand coverage, but expand cash offering. Jenna mentioned that her program has up to $250,000 in cash. This market will go beyond that if in fact that's a need, because it's not just industry property. So that's how it's kind of a cargo form and a stock throughput form all in one. And then I'm going to conclude with reinforcing that our MGA program has a little cyber supplement that we have added in the past year. We had a little bit of a system glitch to get there, but we finally got it added into our system. So now every policy that we issue in the Kieran's program, if you will, has a cyber checkoff. So cyber's in unless you tell us to take it off. And so that's $100,000 of coverage. That is a really nice, robust form. And when that's not enough, the same market we can go to as a brokerage market to go standalone and get up to $1 million of cyber coverage. So these are great markets that are supporting the cannabis industry. They're supporting Cannasure. Again, MGA of the year. Had a lot of fun with our presentation today. We're going to start looking at some of the Q&A. Oh, sorry, last slide is what our website looks like, and you can go grab all of those sales sheets. But let's take a peek. And there's other coverages that we do offer, by the way, that are in the brokerage unit. I just wanted to support the ones that are newest. what is the auto supplement, says Carla. That will be a sub app that we will send out soon after this presentation, along with the slide deck and along with the lighting supplement. Our new market, I hope everyone's sitting down. Our new auto market produces the MBRs themselves. So while we can ask you for that, the new auto market is anticipating to run MBRs on their side. I know, it's a shocker. Sherry asks LRO if one of the tenants is cannabis and or a I'm not saying that, marijuana dispensary. Kieran, do you want to take the LRO conversation?
Yeah, we love LROs. We have some eligibility guidelines around them, but we are standing on the front porch, waving our arms saying, please send us your LRO. So the best possible case scenario is a single tenant that is cannabis related. If there are non-cannabis co-tenants, we ask that the cannabis space be 60% or more, and that the other co-tenants are easy, innocuous type exposures. So no radiator shops or quick lube or heavy manufacturing. We can't quite handle that, but my favorite example is the H&R Block tax office is good to go. So if you have any questions whatsoever, please send it in. Let us vote on it. The LRO segment has been very good to this program.
Great point. And we have a couple of questions, both related to the state of Michigan. Do we want to tackle that, or do we want to take that offline? Because it is a complex answer to a question that seems pretty simple. And that's the financial responsibility, the gram shop law, which are two different coverages, as well as the requirements to sign the attestation forms. So Kieran, I'll let you either punt on that or take it. And I will guarantee that we will ask or answer that question in a lot more detail on how it's solved in the marketplace. But if you want to give a Cannasure answer, I'll let you do it, or I'll let you slide off that one.
Well, speaking for the program, backed by TOPA and Dorchester, we cannot attest to the $100,000 of product liability for adulterated product. We do have exclusions. And so I have not been signing those attestation forms that talk about the $100,000 limit.
Yeah, and it's been very convoluted. If you talk to the MRA, which I think actually has a new name now in Michigan, they would tell you that you cannot have a single exclusion for the financial responsibility piece. Every policy has an exclusion. Every policy, Conifer, Quad Score, Cannasure, et cetera, et cetera. So if they start to come down on that conversation in Michigan, everyone's going to be thrown under the bus. And that's why this is a very complex issue. The solution has been implemented by a group called SAFRA, I believe, and they are a Michigan-based captive that has put together a program specifically to handle the coverages required by the MRA. And we've sent a number of agents their contact information and said, this is the only way by legality that that question's answered. Now, there's other markets out there doing some other things that we know that probably aren't going to fly if in fact that is bird dogged by the department. So I guess I went down that road. Do we have any other questions, guys? I think I got them all. Do I not? I think we are good to go on the Q&A. So if that is the end of our questions, we all want to say with our full sincerity, our love for you guys, Cannasure is nothing without the support of our agents and brokers. And you guys make our jobs a tremendously amount easier because you're helpful in submissions, you're helpful in binding business, you're helpful in growing our organization. You're the meat and potatoes of what we do. If not for you, we don't have a place to go every day. So thank you for allowing us to spend time with you, to share in your successes, to all be part of this wonderful cannabis industry. and signing off saying, let's go and get some more done in 2022. Thank you all.